Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Mostafa Askari. Is that the right pronunciation, sure?
Yes, that's correct.
Mostafa Askari is the chief economist at an organization that I hadn't been previously familiar with, but I heard him speaking on it recently. It is the IFSD, which is the Institute of Fiscal Studies and Democracy at the University of Ottawa. Mostafa has got really quite an impressive background. He is the chief economist. He has held key fiscal, analytical, and managerial positions in the federal government, including at Finance Canada and Health Canada, and as a senior advisor to Canada's executive director at the International Monetary Fund. Mostafa has a PhD in economics from Queen's University. And tonight we're going to be talking a little bit about both the provincial and federal budgets that have most recently been tabled. Sir, welcome to the show. How are you?
I'm fine. Thank you very much. Thanks for having me.
My pleasure. So the provincial government tabled its budget last week. Interesting enough, I think they and others said it will never be voted upon. And even if they get reelected, it might be a different budget that gets presented. So it appears like it's more an elections platform than it is a true budget. But let's talk about it as if it was a true budget. It was surprising in its spending to me. It almost seemed like a liberal budget. In a time where inflation is up and interest rates are coming up, and we've spent an incredible amount of money in the last couple of years in the pandemic, one would have thought a conservative government might have been a little bit more fiscally prudent. But that's my quick analysis. Sir, what's your analysis of the budget?
I think I agree with you. I think if you had asked me before the budget was tabled, I would have said that they're going to show a balanced budget next year, and it would show the sort of fiscal management and fiscal prudence that this government has been talking about since it was elected. So it was a bit of a surprise to me, seeing all the spending and the deficit going on the next 4 years and even beyond that. And I think your comment in the beginning that is probably more of an election platform than a budget, which is probably correct, because when you look at the measures in this budget, it essentially hits everybody. I mean, it provides things for everybody. And from that point of view, I guess you can call it an election platform. In fact, I was a bit surprised when I was listening to an interview with the finance minister, and somebody asked him about it, and he said it's the fully costed budget. Well, it was sort of a weird kind of a wording for a budget. Budgets are always fully costed, but the platforms may not be fully costed. So it was sort of I don't know whether it was just it was a mistake on his part to say it that way or not, but it sort of showed that they're really looking at this as an election platform. But yes, I mean, it's a plan. Whether they finally implement this plan or not, we'll have to see if they get elected or not, and then what part of this will be actually part of their real plan once they are in the office. And there are many things. There are many priorities in the budget, which is always an issue, which is the same actually issue with the federal budget. That when the government has too many priorities, it would be extremely difficult to execute them and actually implement them. So that's another part of the budget that was surprised me. There are a lot of things on the economy in terms of the manufacturing, auto sector, health sector, different parts of the economy, helping everybody essentially, every sector with some kind of a government.
A little bit for everybody.
Yeah, there's a little bit for everybody, and that's going to be extremely difficult to implement.
So let's get into the details in a couple of minutes, but let me, take you, elevate the discussion just for a second, if I could. You've got a PhD in economics. I just took a couple of economics courses, but what I thought Keynes said was that it's time like this when the economy is doing well, the unemployment is low, inflation starts to go up, that you take the punch bowl away. And it seems like both the federal and provincial government have been spiking the punch bowl. What's going on? Is this the right thing to be doing?
Well, from that point of view that you just explained, actually, you're right. It's not, because the economy, both at the national level and the provincial level, has reached a point where we economists call the full capacity, in a sense that what we have is that we have a measure of what we call it the potential measure of GDP, or gross domestic product, and that sort of gives you a measure of the supply side of the economy. And if you reach that level, in terms of the activities, the level of activities, then further spending by the government, especially if it is financed by debt, it would actually overheat the economy, and it may lead to more inflation. And that's the sort of the theory and the framework behind it. Now, on the other hand, of course, governments at the time, think that, well, there are things that they want to do. There are sections of the economy and segments of people, citizens, that require certain help in certain areas, and so they go ahead and add to the debt and provide further essentially demand in the economy. Now, again, if it is a small amount, and if it is for a short period of time, it may not actually have a significant negative impact overall on the fiscal situation or the economic situation. But if it's not controlled properly, and if it continues, then it's going to get you into trouble over time, both fiscally, in terms of credibility of the fiscal government's fiscal management, and also on the economy. It could lead to inflation. It could actually backfire, and those people who try to help actually may be worse off if that happens.
But in reality, how can it not be worse off? I'm in business, and going through annual salary increases, and we increase people's salaries by CPI and a merit increase, and most of them have been 1.5–2% for the last 10 years. And this year, we're looking at CPI in the 5 to 6% range, and then merit on top of it. These are going to be the biggest wage increases people have gotten in 20 years. And they deserve it, because food is up and housing is unbelievably up 20–25%. So that people deserve those type of wage increases. But then doesn't it become a cycle? If people's wages go up, then the company's got to increase their the price of their products, which means that the CPI goes up even more. And that's exactly what we're talking about. And shouldn't government be holding back? Otherwise, we are going to create this spiraling inflation. No?
Absolutely. I think your analysis is right on. It is correct. If wages respond to inflation quickly, and then that becomes, again, that will be part of the cost of the businesses, and then businesses will have to pass that on to consumers, and then that cycle will go on. Some people actually argue, I don't necessarily agree with that, but some people argue that we haven't had significant wage increases in Canada for a number of years, and the wages have not really kept at the same sort of rate at the increase in productivity of the workers, and that as a result, workers are worse off. So that this may be an opportunity for them to catch up. But again, you were right in saying that there is this risk that if this leads to higher inflation over time, then that is going to actually, those people are going to be worse off rather than better off. And so that's a challenge for a government. Now, the issue is that the inflation in Canada is, the reason for that is mostly external factors. So governments really don't have much of tools and instruments, many instruments that they can actually deal with that, other than essentially creating a recession in the economy that will kill the demand and will bring prices down. But so it is a challenging situation for any government to put a budget together in this circumstance. And I don't really envy the finance minister of the federal government or the provincial government to do this kind of work in this kind of an environment. We have a lot of uncertainties, and I mean, the war in Ukraine, the pandemic, all these things together have caused a lot of issues for governments to put the plan together.
No question, but I just wonder whether huge increases in spending that seem to go on for a long period of time when we're in the environment that we're in is the right decision for those finance ministers. Anyway, we're going to take a break. We're chatting tonight with Mostafa Askari. He is the chief economist of the Institute for Fiscal Studies and Democracy. We're going to take a break for messages and we'll be back in 2 minutes. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. The topic tonight is budgets, both provincial and federal budgets. The guest that we have tonight is with an organization called the Institute of Fiscal Studies and Democracies. It is the chief economist, and his name is Mostafa Askari. Mostafa Askari is he has a PhD from Queen's University in economics. He's held key fiscal, analytical, and managerial positions in the federal government, including at Finance Canada and at Health Canada, and is a senior advisor to Canada's executive director at the International Monetary Fund. Your lead at this organization is Ken Page, who was the budget officer at one point in time for the federal government, and someone that was thought of as very fiscally prudent. Was that not the case?
Yes, I mean, Kevin Page, yes, he was the first parliamentary budget officer. Actually, I worked with him there as the deputy parliamentary budget officer. And yes, he is obviously, he's always concerned about fiscal transparency and fiscal prudence at the government level.
Tell me a little bit, if we could, about your organization. I hadn't heard about it before.
Yeah, this organization was established by Kevin Page about 5 years ago. After he left the parliamentary budget office, he joined the University of Ottawa he got a chair for teaching there for a few years, and then he established this institute. It's an independent nonprofit institute, and we are self-funded. We don't get any grants or anything from anybody, and we are funded through essentially projects that we do for different organizations, including governments and private sector organizations. And we focus on we focus also on the fiscal finance issues, as well as some other issues. We've done a lot of work on for First Nations child welfare, and we are right in the middle of a project for them right now. And we do one of the things we do every year when the federal election is happening, we essentially score the platforms of different parties based on some fiscal credibility measures that we have, and to see whether the platforms are fiscally credible or not. So you can see that on our website.
So, I may be wrong, but my sense of the politics in Canada and in Ontario is that the vast majority of people are in the center of the political spectrum, and they tend to be fiscally conservative and socially progressive, and so fiscal prudence is important, but at the same time they want some of the social programs that people have been talking about, but they don't want governments to go crazy in that regard. And it seems like the political spectrum has either gone to the right, and I'm thinking mainly the federal conservatives, not necessarily the provincial conservatives with this current budget, but the federal conservatives, and then to the left, and certainly this Liberal NDP accord federally, and both what we hear from the Liberal Party and the NDP Party provincially seems to be more left wing, more spend and tax than has historically been, and that the center is vacated. What's your sense of where we are from a sort of a political spectrum standpoint, and do we have parties that stand for fiscal prudence? And maybe I could just say one other thing. During the federal election campaign, there didn't appear to be anyone talking about fiscal prudence. I would have said fiscal sanity, but maybe that's too extreme. And then, during the 2019 campaign, the only person talking about fiscal issues was Max Bernier, which was surprising, with the breakaway very right-wing PCP party. So what's happened to the center, where Paul Martin, John Turner, Jim Flaherty may have been talking about fiscal prudence?
I think you are right in a sense, but there is sort of a change in the view of how fiscal situation works. I think there is on the very right, and those who are very extremely fiscally prudent and talk about the budget like Maxime Bernier or some other people that we have heard from, I think they are sort of obsessed with this idea that the budget of the government is the same as the budget of a family and it has to be balanced all the time. That's sort of the obsession with the zero balance doesn't work for the government. The government is different than a family. Governments don't have a finite lifetime, but the families do. And the governments continue to work over time. So debt at the government level is a little bit different than a debt for a family. That's sort of the comparison that some people make is actually the wrong comparison. Now, government debt, if it is not rising at a fast pace, is actually not necessarily a bad thing for the overall system, financial system of the economy. If you look at the many companies that run pension funds and those kind of financial institutions, that private financial institutions, they actually use government debt, bonds, as a sort of secure and secure kind of an asset that they need in their portfolios. So in that sense, government debt actually plays a positive role. Now having said that, we have a sort of a measure of government debt that we do this analysis that if the amount of debt that government accumulates relative to the size of the economy increases over time consistently, then you are that's in the long run, not necessarily short run, in the long run. Then you are in trouble. You are fiscally in trouble. But if we do the calculation, and we'll see that over time, if we don't make significant changes in the taxes and the spending, and that to the size of the economy, that ratio of the debt to size of the economy starts declining, then what we say is that the government actually is fiscally sustainable, even though they may be running deficits right now, but they may be sustainable in the long run, in the sense that they have room to manage this without getting into trouble, without getting into a fiscal situation that we had in the early 90s when we hit the wall and we could not actually even, government could not even borrow money because the markets would not take it.
So I agree with you, and I understand. I'm a finance guy, and I've always said that the household budget isn't the right comparable, but a business might be a better comparable. And businesses may have debt forever. And frankly, some companies that don't have debt end up being attacked by private equity people because they know that there is some debt capacity. And if you take a look, therefore, at some of the most successful companies, they will always have debt, and they'll also and always be financing some of their expansion. But the expansion is typically acquisitions or capex, and so therefore it's going to be something that is of long-term value rather than something that's of short-term value. And they'll look at the comparable metric that you're talking about, debt to EBITDA, debt to total assets, et cetera, such that it is either flat or declining over time. And if the debt as a size of the company, which would be comparable to your debt compared to GDP, grows, then they'll get a rating downgrade and the interest rates will go up. And so that's the discipline. So I agree that debt doesn't need to be zero, and you don't need to have surpluses to pay down that debt to zero. But you can't be increasing debt as the size of the economy constantly. And it appears with, deficits that are going on federally for more than a decade, and deficits in Ontario that are going on for numerous years, that we risk that kind of a situation. And you did describe, what happened with, I think people called it the Peso Crisis in 1990, when Paul Martin and Jean Chrétien really had to tackle the deficits in Canada and bring it down. Otherwise, people were worried there'd be a run on the Canadian dollar, and Canada would follow, the example of the Peso Crisis. And what they did at the time, and it happened in the United States as well, is they dramatically reduced spending such that we actually in the 1990s at some point in time, please correct me if I'm wrong, had surpluses in both Canada and the United States, so much so that some people in your spots were saying this is a problem because we might pay off the whole debt. The surpluses are becoming so big, and people were worried at that time. Anyway, right now, the economy maybe is not on fire, but unemployment's pretty low. And the economy, after a year of a huge contraction because of the pandemic, seems to have done what actually Donald Trump said. It's been this V-shaped hockey stick recovery, and growth is up. And granted, we have lots of problems in this world with supply chain issues and what's going on in Ukraine, et cetera. But when you think about housing affordability, where inflation and housing prices might be double digits, if not frankly 20%, where the central bank appears to be trying to dampen, and the federal government trying to dampen housing prices. When inflation is up, when companies are going to be raising their wages, is government doing the right thing, or are we not headed for that crisis again in the future if we don't smarten up?
I mean, you're right, Brian. There is definitely a risk right now. I mean, I can tell you that my sort of calculation and estimate shows that the federal government fiscally is sustainable in the long run. Right now, there are our estimates, and actually the Parliamentary Budget Officer has similar kind of estimates right now that the federal government is sustainable. In fact, Ontario government, again, I just did recently some calculation for the Ontario government, and the Ontario government is also fiscally sustainable. But there is an issue there. There is a risk. The risk is that, for example, we are still at very low interest rates. And if interest rates go up significantly because of the inflation that we're facing, and if this crisis in Ukraine, for example, continues, and then the Bank of Canada or other central banks in other countries were forced to increase interest rates significantly, then we could see a risk, and we could see that fiscal sustainability at jeopardy because higher interest rates certainly is not going to work for us. It's going to work against us. So
why? Explain why.
Well, higher interest rate at the federal level, there are two impacts from higher interest rate. One is that it will increase the cost of debt, because with the debt that the government has, they have to pay interest on that debt. And as interest rates go up, they have to pay higher interest rates. So that by itself would cost the government a lot of money if interest rates go up significantly. On the other hand, interest rates actually reduce the level of economic activity, and that decline in the economic activity will reduce the government revenues. And that would be another sort of hit on the government balance and the government. So the government may have to borrow even more money in that case. So both cases, if interest rates go up significantly, then we are going to be in an issue.
Okay, so let me challenge you, sure. You use the word if. I saw a graph recently of interest rates and inflation over the last 50 years. And this is the biggest separation in that history of inflation and interest rates. And that would suggest that if inflation stays where it is, interest rates have to go up. And the central bank has already been mentioning, rumoring, suggesting that interest rates are going to go up precipitously, potentially 50 to 100 basis points. Frankly, with inflation rates where they are, they have to go up even more than that. So why are you saying if? Like, isn't it when interest rates go up?
Oh, well, okay, you may be right. I mean, when, because the Bank of Canada already has mentioned that they are going to raise interest rates again this year. The question is how much. I think when I'm talking about significant increase in interest rate, I'm not talking about 100 basis points. I'm talking about 300, 400 basis points. That would.
So based on the graph that I saw that compares interest rates and inflation, frankly, interest rates should be about 4.5% right now. That would be comparable to what you're saying.
Yeah, but the thing is that you have to be careful how you react. The central banks, how they react to inflation. If they have all kinds of research and analysis done when they make their decisions, and if they see that inflation is in fact something that is going to be here for another 2 years or so, then you're right. They may actually go that far that you're talking about. But if their analysis shows that, well, there is a higher likelihood that inflation actually the next 6 months starts going down, and it will go down towards what they call their sort of their target or target range, then they don't have to raise interest rate in the way that you are describing that. So it all depends on what is your projection of what, or the Bank of Canada's or other central banks' projection of what is going to happen. Now, nobody can project precisely anyway. I'm not saying that they know exactly what's going to happen, but they do analysis and have ideas and what are the probabilities of a higher inflation staying for another 2 years or another 6 months. And based on that, they make their decisions. So we have a rule in public finance that if the rate of interest is higher than the rate of growth of the economy, then you are going to get into trouble fiscally. But as long as the rate of interest is below the rate of growth of the economy, then you're sort of safe in the sense that your debt to GDP, to sort of your debt, the share of the size of the economy, is not going to get out of hand. Now, this rules is subject to other conditions as well, but simply that's the sort of the high-level rule that we have in public finance. And for now, we are at least fortunate. We're still well below that sort of the benchmark that I just mentioned. But if interest rates go up significantly, then to 4% or 5%, then we are going to be in trouble.
Well, I got to tell you, you're the smart guy, the chief economist, but I worry that interest rates are going to have to go up. They're going to have to go up by more than 100 basis points. I think that inflation is here to stay for a while. And I think it's going to lead to a situation where, maybe a year from now, 2 years from now, governments are going to have to change their tune and are going to have to cut budgets fairly dramatically, such that, maybe we don't balance the budget, but we get a lot closer to that, and we don't increase. People have been talking about recession, talking about stagflation, talking about fiscal challenges more today than they ever have. And I do think that the low interest rates that probably were lower than they had to be for longer than they had to be for two reasons. Coming out of the 2008-2009 financial crisis, that was one of the vehicles that central banks used to save us there, and we learned that lesson such that we repeated it during the pandemic. But what it led to was unbelievable inflation appreciation in asset prices, and the stock market was at a high. Stock market at a high during a pandemic, and housing prices going up by 20% for 2 years on a row, and caused primarily, I think, because of low interest rates and the fact that those mortgage rates were so incredibly low, people could afford it. Anyway, we're going to take a break and come back in 2 minutes with the chief economist that's going to educate us a little bit more on the provincial and federal budgets and what the future holds for us. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Mostafa Askari. He is the chief economist at the Institute of Fiscal Studies and Democracy at the University of Ottawa. He's got really quite an impressive background previous to his role as chief economist at the Institute of Fiscal Studies and Democracy. He was the deputy parliamentary budget officer at the Parliament of Canada for 10 years and 9 months, where he managed the preparation of economic and fiscal analysis, including tax and expenditure analyses, providing short and long-term economic and fiscal projections for members and committees of Parliament of Canada. He appeared before parliamentary committees as a witness with the parliamentary budget officer to discuss the PBO reports and respond to questions from parliamentarians. Before that, he was the Director General Applied Research and Analysis Directorate at Health Canada for 3 years. Before that, he was a senior chief at the Department of Finance for 18 years. So this guy knows his way around Ottawa and around budgets in Ottawa. He's got a PhD from Queen's University, and he's often a commentator in media on budget and fiscal issues. And so it's a real pleasure, sir, for me to chat with you tonight. I feel like I'm back in my classes in Harvard, chatting with smart guys, and so it's a real pleasure. So we've been talking about fiscal sustainability, and you say that both the provincial government in Ontario and the federal government in Ottawa are fiscally sustainable. And the reason why is because while we're running deficits and debt will be increasing for 4 or 5 years in Ontario and 10 plus years in Canada, given the current budgets, the growth of the economy is going to be greater than that. Tell me what the risks are to your analysis, and what would be the downsides. As I mentioned just before the break, some people are talking about a recession. Some people are saying that it's been one of the longest time periods, other than the contraction because of the pandemic, that we've had in sort of the business cycles, and we're due for a recession. And I don't know where they come up with that analysis, but they just sort of think that we should have a recession every 5 to 7 years or something like that. Some people are talking about stagflation, and that we haven't had stagflation since I think the 1970s. And other people are talking about, could this be the repeat of what happened to Canada, United States, et cetera, in the 1980s that led to the 1990s, dramatic cuts. So I know you run scenarios. If you're wrong, what do you think the risks are? And is it a big risk or just a small risk?
I think right now the risks are big for a couple of reasons. One is that we have, sort of out of a pandemic, but not necessarily. We see that China is still struggling significantly with this issue. Whether we are going to go through another round of lockdowns, I mean, that's not very likely, but it is possible. That's one risk, obviously. There is a risk of Ukraine if that war continues for a long time. That's going to have significant impact on the economies of Europe and even US. In the first quarter of this year, US showed actually a negative growth, which was very surprising. Canadian situation in the first quarter of this year seems to be better, but not necessarily. I mean, if US goes down, we are going to be affected significantly by that. So that's another risk. There is a risk of inflation, as we talked about, that could lead to higher interest rates, and those higher interest rates could lead to fiscal problems. There is also the risk of how governments behave and react to these things over time. I mean, we talked about the federal and provincial governments sort of not really paying a lot of attention to deficit and getting involved in a lot of spending. I think that risk is there still. If the governments get into sort of programs that have significant permanent impact on the spending over time, and then that could affect the fiscal sustainability. I'll give you an example. At the federal level, the federal spending is structured in a way that right now, in a way that there is a sort of inherent downward sort of I will say downward pressure on the spending over time. I explained that why that is the case. That is, a lot of about 60% of government spending, federal government spending, is transfers to people and transfers to other levels of government. And those programs are structured and they run by formula essentially over time. A lot of the transfers to people, like the oldest security, child benefits, are indexed by inflation. And inflation is, if we assume that inflation is going to go back down to 2 or 3%, then that is sort of a very normal rate of increase in those kind of spending. The transfers to provincial governments, other levels of government, most of it, like the Canada Health Transfer, Canada Social Transfer, equalization payment, are indexed to the rate of growth of the economy. Now, overall, when you look at the spending of the government, if we don't add anything to those spending by discretion, through introducing new programs, then those spending will grow less than the rate of growth of the economy over time. And that sort of inherent downward bias in the spending actually helps the federal government to maintain a fiscal sustainable situation. Now, if they introduce programs that inherently can actually grow faster than the rate of growth of the economy over time, something like a pharmacare, for example, then they may have that challenge of how to maintain the fiscal sustainability over time if a major spending in your program actually in your budget is going to grow faster than the size of the economy. So that kind of a thing that kind of analysis is necessary to understand exactly how it works. Now
let me interrupt you. Apologize.
Yeah, sure. Yeah.
But let me challenge your your use of the word if. So, we've just had the institution of childcare across the nation. The pharmacare that you mentioned as an if is one of the basic tenets of the NDP Liberal agreement, accord, coalition, whatever you call it, that they've put in place. And if they don't put it in place, then it's going to be the end of their agreement and therefore the end of the government. We have a war in Ukraine that, suggests that increasing defense spending is something we're going to have to do. They've just announced that we're going to, after, 15 years of delay and dithering, we're going to order these C-18s that Harper had recommended, eons ago. I've interviewed people that are worried about Canadian sovereignty in the Arctic and what Russia's doing in their Arctic and what we need to do if we don't want to risk our sovereignty in the Arctic. We've talked about frigates, we've talked about armaments, it goes on and on and on. So in that kind of an environment of childcare and pharmacare and defense spending, and we haven't even got to climate change, we haven't even got to infrastructure, how can government spending not go up? And why are you using the word if?
Well, let me say a few words on pharmacare, because I've worked on this one. Pharmacare is a very expensive program. And if I were to predict, I would say that we are not going to see a national pharmacare in Canada. It doesn't matter what the agreement with the NDP says. I think people at the federal level understand it very well, that such a program is going to put government spending at the federal level at risk. There are two issues with the pharmacare. One is that, first of all, it's a very expensive program. The second issue, the challenge there, is that most provinces have already said that they don't want to participate in a pharmacare program, national pharmacare program. And without provinces, the federal government cannot implement the pharmacare program. So that's one thing. But I agree with you. If the federal government goes ahead with that kind of a program, then this is exactly what I said, is that if you implement programs that have the potential to increase their cost increase over time significantly, which the pharmacare has that kind of a potential, because elements of the pharmacare is that the drugs are actually the fastest growing portion of the healthcare system in Canada. So if you make that a public spending, then you are going to have to accept that increase in cost over time. And federal government understands this very well. And so this is part of their agreement, whether or not they're going to go ahead with it, or they're going to do something that is going to look like that they're doing something in that area, I don't know. But my prediction is that we're not going to see a national pharmacare.
But I hate to have the chief economist's prediction that we're sustainable based on not believing that they're actually going to do what they say they're going to do.
Yeah, no, you're right. I think, well, first of all, they didn't say they're going to do a pharmacare. They said they're going to look at it. And they know that they're going to have challenges from provinces. So they know that even if they go ahead and say, well, we are going to do it, and provinces say they don't want it, then it's not going to happen. So anyway, going back to this, I agree with you that there are all kinds of risks, as I mentioned, and I'm not saying that the federal government is going to stay sustainable or Ontario government is going to stay sustainable fiscally. I'm saying that based on the current analysis and the current structure that we have on the spending and taxes, they're sustainable. If they change those, then yeah, I mean, everything can. If the federal government goes ahead and just by as a hypothesis, if they go ahead and cut taxes by 20%, they're gonna be affected significantly fiscally. Or if they're gonna increase the spending by a significant amount permanently, then they're gonna be in trouble. Those risks are there. And then the other risks, the external risks like the interest rate and the recession and those kind of things that can happen.
What would be the impact of increasing defense spending to 2% of GDP?
Depends on what kind of a spending. One of the things that people don't realize that when the government actually spends money on capital, like fighter jets, for example, that money, if they spend $30 billion or $40 billion on buying fighter jets, that money does not show up in the budget that you see next time, because those are assets, and assets are amortized over the life of those assets. So what you see in the budget, for example, an asset that has a 40-year life cycle, you're going to see essentially 1/40th of the cost of that asset in the budget every year. So you're going to see a gradual increase, but you're not going to see that $40 billion in the next budget.
But what happens to the money, the debt? The debt's there right away.
Yeah, the debt will go up, but not the deficit. You see that there's a difference there. You know, debt and deficit are not necessarily the same thing. The government has to borrow money to pay for those. But when you see their amount of spending that they are doing, that $40 billion does not show up in the spending. This is the accounting system that we have in Canada and in other countries as well, that capital spending is not a cash-based accounting system, is what they call an accrual-based accounting system, which means that you amortize capital spending over the life of the capital.
No, I understand, but what that does is effectively understates the real true cash flow deficit, and the cash flow deficit is therefore actually greater than the actual, the accounted for deficit. The interest rate, the interest payments, and the debt go up because you've actually spent that cash. We're going to take a break though, and come back with some concluding comments with our chief economist guest in 2 minutes. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Mostafa Askari, who is the chief economist of the Institute of Fiscal Studies and Democracy at the University of Ottawa. He has been in government for, it would appear like, more than 30 years, and has worked in the Parliamentary Budget Office, the Health Canada, the Department of Finance. He's got a PhD in economics from Queen's University, and he obviously knows his stuff. And sir, what you have said is that that given our current situation, I guess you're saying we shouldn't be worried that both the provincial government in Ontario and the federal government in Ottawa are fiscally sustainable. But what do you think? Is that sort of the bottom line? Don't worry, or are you a little bit worried?
No, I don't think. I would say don't worry. I think we always have to worry about the future. I think, as I mentioned, the current situation with the current structure of taxes and spending that we have at the federal and provincial level, I mean, I'm talking about Ontario, I think we can say that those levels of government, both of them, are fiscally sustainable, but there's significant amount of risks. So we have to worry about it. There's significant amount of risk in terms of spending, in terms of what is going to happen externally, and what kind of interest rates we are going to have, what kind of inflation we are going to have, and whether the governments would continue to increase their spending at a rate and level that would actually put that fiscal sustainability in jeopardy. And those are significant. Those are definitely a risk. But what I would say is that if they behave prudently, if they take into account those risks, then we should be okay.
Well, I hate to rely on a situation where politicians have got to take into account the risks because I worry that all they care about is being elected again. And I think that what we've seen in Ontario is a budget that has been presented that is more an election platform than it is a budget. And they've themselves have said that it won't be voted upon. And if they get reelected, they'll probably present something different. And I appreciate your confidence, albeit with some risks. In our situation, I got to tell you, and I got to tell everyone, I'm a lot more worried than our guest is. I think we're at risk of overheating the economy. I think that basic Keynesian economics or basic economics or just basic smart math tells us that when inflation is as high as it is, interest rates have got to go up. When interest rates have got to go up, it's going to have a negative impact on the economy. It's going to have a negative impact on our budget deficits and our debts. I think that with our economic situation the way it is, where we've got minority governments that rely on other parties to support them, that I think that both federally for sure and provincially, if the Conservatives don't win a majority, we're going to end up having a situation where the political parties pull each other farther to the left and we end up spending more money. And we've been already, if not committed, and our guest has pointed out, it's not a commitment to pharmacare, but it is a promise to look at it. I worry that we're going to put in place. And Paul Martin started talking about childcare. When was it? 15 years ago. So yeah, it takes a while, but it actually came to pass eventually. And even, in the past month, Ontario that said they would never do it, have instituted childcare, which is the most important, most expensive social program Canada's put in place in a long period of time. And we may put in pharmacare in the future. So bottom line, I think we need to have more fiscal prudence in Canada. I think that we need to have political parties that talk about that. And I worry that the only people that are potentially considering that are the far right. And that comes with some social issues that I don't feel comfortable with. And so I think that the center of the political spectrum needs to refine what Jim Flaherty, Paul Martin, John Turner would have sort of positioned, which is a far more fiscally prudent kind of scenario, which I think calls for caution in today's environment of inflation over 5% and the economy at close to full employment. And I'm worried that our chief economist, even though it's been a great conversation and he's obviously an incredibly smart guy, is counting on politicians in the federal government to be smart and not put us in unbelievably expensive programs when they've actually said they're going to. And so I'm worried that he may be a little bit too optimistic. But then he's been in politics and government, not politics, but in government for 30 years. So maybe he knows better than I. Probably he does. That's our show for tonight. Thank you, sir, for joining us. I really appreciate the conversation and the education. That's our show, everyone. I'm on every Monday through Friday at 9:60 a.m. at 6 o'clock. You can stream me online, even from Ottawa, sir, at www.saga960am.ca. All my podcasts and videos are available on briancrombie.com. The videos are on Facebook, Instagram, and YouTube, and the podcasts are on Apple, Audible, and Speaky podcasts. Thanks for joining us, everybody. Good night.
Thank you.